we've got Rajiv Anand, who's the Deputy MD at Axis Bank, to talk to us about all of these and maybe give us better perspective. Rajiv, how would you look at, first off, good morning. How would you look at the policy and how would you look at this change in stance? How quickly do you think it's going to pave way for rate cuts? Okay, I believe we have him on a patchy line, but yeah, I mean, so some of these factors playing out. Let's quickly have a look at how markets are responding. Let's pull up the Nifty 50, see how that's really playing out, and the Nifty Bank especially. There you go, clearly positive, 0.8 odd % higher. So markets seem to be cheering this change in stance and possible paving way for rate cuts as well. So that's one interesting piece. Let's look at some of the top gainers in terms of the Nifty 50. Infosys, ICICI Bank contributing well to the Nifty 50. Let's pull up some names as well. Something like a Bajaj Finance likely to benefit from a rate cut if at all that were to come through. Of course, didn't come through today, but that will be in focus. There you go. Trading well in the green, 3% higher on Bajaj Finance in trade today. 7,400 plus is the intraday high that one has clocked. Let's pull up the sectoral heat map, see which sectors seem to be doing well. Realty Pack will definitely also be the other one in focus, and we will have and we will speak with managements to get context on that. But there you go, the Nifty Realty up 2+%. PSU Banks also doing fairly well, nearly 2% higher. The Nifty Pharma Index, of course, doing well, 1.5 odd %, but the Nifty Bank will be more in focus, 1% or so higher as well. What's not doing so well? Well, domestic, 0.7% lower on the Nifty FMCG. Do we have Mr. Anand again? Just quickly checking in. Okay, perfect. Rajiv, I hope you can hear me.
I can hear you.
Hi. So just your quick take with regard to the policy. Of course, stance change, no rate change yet. How quickly do we see a rate change? And your quick views.
I think broadly on expected lines, I think there is so much of uncertainty across the globe at this point in time. Yes, we saw a big rate cut in the US. We're seeing geopolitics, play out quite aggressively. And I think RBI has been pragmatic at this point in time. It's built the bridge to a rate cut, but it's left the door open. May or may not happen in December, but will probably happen sometime between December and March. Is what we believe. But I think the bigger issue, for banks is, you have a 10-year at 675, but on the margin, banks are raising money, from non-retail term deposits for 1 year at somewhere between 7.75 and 8%. And we would certainly like to see with this change in stance, the short end of the curve begin to come down a little bit as well. That will certainly, help banks in the short to medium term.
Liquidity currently definitely in focus. It's something that both the street as well as the governor seems to be focused on, maybe indirectly, not as much directly. How do you view liquidity and how do you see it easing? Just give us your view with regard to how quickly can it start to ease, and therefore how quickly can it start to impact the banking sector as well as other financials?
I think the RBI has certainly moved in terms of its stance on liquidity. It had kept liquidity quite tight, but over the last couple of months, we've seen liquidity ease off, meaning that overnight rates have fallen just a little bit. But I don't think the market has the confidence yet, which is really why the longer end, the 3 months, 6 months, and 1 year rates, have not come down. It is because of sort of various reasons as well. One of the reasons being that government spending has been a bit anemic at this point in time. We do believe that that should start to catch up in the second half of the year, and so therefore my expectation or my hope is that in the second half of the year we will see short-end rates coming down.
Right. So maybe second half of the current financial year. I want to also touch upon what your view is with regard to rates again, because what seems to be the case is that if at all the RBI does not cut in December, you suggested rate cuts between December and March likely to start, at least for the RBI. It seems if the RBI doesn't cut in December, the the interest rate differential between the India and US will be quite high. Would that at all be on the governor's mind in your view?
I think we've got to look at the yield curve in two separate pieces. We just spoke about everything up to 1 year. We are very bullish on, let's say, for example, everything beyond 5 years. The demand supply situation has significantly changed, meaning that the fiscal situation has significantly improved, meaning that the government will issue the same or slightly lower as we go forward. More buyers have come into the market thanks to the JP Morgan index, thanks to the FTSE inclusion, and sooner than later the Bloomberg inclusion as well. And so therefore you're going to see a situation where supply is going to be constrained from the government of India, but the demand is only going to increase. And so therefore we are quite bullish as far as long bond rates are concerned, and which in general is good for the economy, good for corporates, good for the government.
Right, and clear impact of the liquidity will be on deposit rates, especially for banks like you. Now, I'm not mentioning Axis Bank in particular, but just give us a lens into the entire industry. Do you believe deposit rates will cool off given the kind of situation we are just coming out of? Likely, will deposit rates cool off maybe 3 to 6 months from now? Is that expected at all, or will margins start to compress for the industry as a whole?
2 points there. I think the expectation is that deposit rates have certainly peaked. I don't see deposit rates going up from here. But will they cool from here? I think that's a question that will get answered over a period of time. I think if deposit rates don't cool off, I think you're going to see a further slowing of credit. Ultimately, banks are a marginal cost business. If the cost of funds goes up, it is inevitable, perhaps with a lead and lag, that the higher cost of funds will get passed on the credit side.
And you of course, but there are other large lenders as well who have faced some bit of asset quality. Can I say the stress has started to show, if at all, just a little bit. The governor has warned of lending practices. He's spoken of NBFCs lending, and he's spoken about how they have to be more cautious with regard to their lending, even though growth is extremely strong. Are you seeing some of those trends play out, and is that competition high even now, or are you seeing a little bit of an ebb with regard to the way lending is playing out in those pockets where there is asset quality concern, something like an MFI, something like an MSME?
We are certainly, I mean, if you look at, I mean, we will still have to wait for the current quarter numbers to get to announce for all the banks and NBFCs. But if you saw the last quarter, we did see in the sectors that you mentioned, we did see across the sector a slight increase in terms of credit costs in MFI and unsecured. And I think that's exactly the point that the governor spoke about today, that banks should certainly be cautious within this space in terms of kind of lending behaviors that they are exhibiting, and we completely agree with that. You have seen that lending in this sector has come down for both NBFCs as well as banks. We will have to wait and watch in terms of how credit behavior is playing out before we are able to assess what the next course of action should be. But I think the RBI and the governor's warning today is well received.
Right. And Rajiv, if I can pick your brain with regard to both growth, overall GDP perspective, as well as loan growth in the industry as a whole, what's the sense like? Do you expect on this higher base loan growth to start to cool off? And at the same time, can we expect GDP growth to hold given that the repo is still at 6.5?
I think in the context of where we saw GDP growth in the first quarter, the fact that RBI has held its GDP growth numbers, I think is certainly a positive surprise. As far as credit growth itself is concerned, I think we've already seen a cool off, and we've also seen the gap between credit growth and deposit growth narrow. I think we'll finish the year, somewhere in this vicinity of 13 to 14%, broadly, where we are at this point in time.
LDR unlikely to shrink, right, Rajiv? Point being that till the end of the year
That's
at least.
correct. That's correct.
Okay, point taken. Thank you so much, Rajiv. It's been a good perspective. It's been good chatting.
Thank you so much.